Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. This is going to be the commodity hour. I'm going to talk a little bit about some things other than commodities. I want to talk a little bit about the Bradley model because it's related to cycles, and I've had some questions about it just to see, how it's working and, where it comes from. But the main thing that I wanted to start out with today is the fact that we had a really strong trending day yesterday in the market. And that day that when we have those real strong days, those are outlier events. In other words, they don't happen very often, usually on the neighborhood of around 5%. Now, certain characteristics happened on those days. First of all, when the market opens, and you can see from the chart, if you go into the Tiger TV and look at it, when we started early in the morning, which was around 3 in the morning, New York time, the market backed off to a 61% retracement down around 1185 and then exploded to the upside for the next 3 or 4 hours before we actually opened for the New York Stock Exchange. Well, when it does that, what it's doing is it's telling you that, the number of advanced declines, in other words, advancing issues versus declining issues is going to be very, very strong. And when you see that advancing issues versus declining issues better for the 5 to 1, then you know that you're going to have a pretty strong trending day, which it's hard to fade it, but, there are times that you can do it. What's interesting about this chart, and this is characteristic of what happens every day, if you'll study, the market action of the S&P or the Forex or whatever you want to do, it repeats the same type of action every day. If you'll notice, during that 12-hour time period, on the 12th of October, that there were 4 very distinct corrections. They were all about 5 points. They only lasted, about a half an hour, sometimes up to 45 minutes. But that's really what happens. It just kept repeating and repeating and repeating. And when you get really strong trending markets, that's what's happening to that. Now, you don't get those all the time, but, they do occur around the neighborhood of around 5% of the time. And then you'll have, an idea that this is what you want to look for. So when you see that really big thrust early in the morning, especially right before the market opens, it's telling you that buyers are coming in and they're overwhelming the sellers. So it's really difficult to, stand in front of that, and that's why people, they can lose on real strong trending days because, they just don't back off very much. There were 1, 2, 3, 4 patterns there where the market backed off just about exactly 5 or 6 points. And remember that the harmonic number, the number that appears most often in the S&P 500 is 5.5 points. In other words, 5.5 points. And that's been going on since they started trading the S&P back on April the 16th of 1982. That number has not changed. When the markets get really crazy, it will expand by numbers of 1.618, 2.618, or 3 when the markets go in crash mode or vertical mode. But most of the time, and I'm talking better than 90% of the time, it'll be a swing of about 5.5 will be the actual thing. Now, we have tested this over thousands and thousands of samples. In other words, we have asked the market to give us the most common swing in the S&P, and that number comes out right at 5.5, and then you'll be able to, prove some of these things, to yourself. If you have any questions, you can, call me on 877-927-6648. But I think this starting of the show today, if you'll remember that real strong trending markets. They repeat as far as the number of corrections you get. Sometimes they're even smaller than the numbers that we got yesterday. But in fact, you do see these all the time, and you have to remember that the market, all it does is it does the same thing every day. It just does it a tiny bit differently. Remember, when you're looking at the chart, you're just looking at an X and a Y axis of a blank piece of paper, and within that are these price patterns that pop up that are related to these patterns that we look at. AB equals CD is what the market does all the time. It either goes up, down, or sideways. Sometimes it does all three in the same day. But this is what happens, and if you'll start to, learn to see some of these patterns, you'll be, a little bit better off on some of these things. On real strong trending days like we had on the 12th, if you're in that and you lose, just remember, the next time it happens, just say, oh, well, I better stand aside. I know there was a full moon yesterday, but that didn't happen, and there was also apogee where the Earth was very far away from the moon. But that's a cycle, and that's not related to the price pattern that we're looking at, because you don't know exactly when that thing is going to turn. We think it turns sometime, late in the afternoon after we got up to that 12-16 level, and now we've backed off from that level. But that's nothing more than an assumption. So all we're trying to do is to prevent you from when you have these real strong trending days. And remember, in the stock market, when you're watching this, it's the advanced decline line to watch. In other words, the number of advancing issues versus declining issues. If that's 4 or 5 to 1, and that means that almost everybody is buying. And remember, the folks that are on these trading desks, they act like little robots, and they're talking to themselves, and not just to themselves, but back and forth, and they're saying, oh, let's buy this, let's buy that, and they get into a buy mode, and it stays that way. And the same thing happens, on downtrending days. And today, we've had basically a two-way market. We had a market drop a little bit, and it's rallied up and backed off a little bit, so it's swinging back and forth, in a normal context. So that's the main thing that you want to keep in mind. Okay, we've got a call from Mike in California. Are you there, Mike?
Yeah, I'm here. Good morning.
What can I do for you?
Yeah, this is more of a general question than anything else. After QE1 and QE2, have you had a chance to go back and look to see how well your methods correlate when they're in effect as opposed to when they're not in effect?
Oh,
it looks to me like
Mike,
QE3, and you can call it whatever you want to, but between our Fed, Europe, and Great Britain, we're going to get a bigger QE this time than QE2 was.
Yes. What I usually do is I rephrase it differently, Mike. I call it BS1, BS2, BS3, BS4, and you can go out to BS square 12 because it's all it is. None of these things that happen with economics will change the numbers that we work with. We've watched these numbers for over several hundred years in all kinds of markets ever since 1876. Every 3% swing in the Dow Jones Industrial Average or the S&P when it started back in the early 50s. So none of these things will change, and the reason for that is it's just normal market action because it's based on normal behavior. The market operates on fear and greed, and fear is a greater emotion than greed, and that's why prices come down faster than they go up. But they can do whatever they want with these QEs or whatever they want to call them, but it's not going to change much. Overall, I think personally what Bernanke has done, as he has misinterpreted, the type of market that we're in. He doesn't see this as a debt cycle. He sees this as an unemployment cycle, and that's not where the problem is. In 1929, it was unemployment, but now it's not. Now we have debt. I mean, we've got debt more than it's coming out of our ears. I don't know how old you are, Mike, but when I was a kid, my parents couldn't get a car until they paid for it. We couldn't get a washer or dryer. We didn't have a color TV till I was I think 20. I was in college when they finally had a color TV, and so you just now these kids have they come out of school and they've got $100,000 in educational debt, And with debt we have in houses and stuff, this is a debt cycle we're in, and that's what's going to happen. I don't know how it's going to end, but I think it'll end badly.
Well, I like your viewpoint. One more quick thing, if you've got a moment. You're going to have somebody on later on talking about grains, right?
No, I was hoping to do that, but Rich is unavailable today.
Oh, okay.
He's traveling, and but I have my ideas on the grains because I.
Are you going to discuss that at some point?
Yes, I'm going to do that right after the break.
Okay, thanks very much. I appreciate it. Have a good day.
Yes, thanks for calling in, Mike. Yeah, that's we are going to talk about the grains because the corn position that we looked at had a huge move. It's backed off a little bit. Now we're going to be able to see how well the test is. The other grains are actually holding up much better. Soybeans and wheat are holding up far better than things that than the corn, but I still think the corn has got a really good chance. It had a huge move off the bottom. I mean, that was just flat out lucky. If you got your choice between lucky and smart, always pick lucky. And that one worked out, okay. Whether it continues to go up or not, we'll have to, to wait and see. But we'll cover the grains. And also I want to cover some lumber because, lumber is one of the basis of the housing industry, and the housing industry has gotten hurt really badly, and we really need to do that. We'll be coming up to a break here pretty soon, but then after the break, what I'm going to do is I'm going to bring up a chart on the Bradley stock market model, which is the basis of the cycles that we look at, that started these astrology things that we've been working on, and give you an idea of where we are now. And I've actually been able to blow it up so that it's easier to see, and you can see some of the cycles that we're looking at, and I'll give you the positive and negatives of it because it's certainly not foolproof, but it does give you, certain really good parameters to look at as far as where the markets might be going, in a longer term time frame. We did do an IBM trade yesterday. We sold the IBM. It's working a little bit in our favor right now. Nothing spectacular, but it still started off in the right direction. The stop would still be the same, up in the 192 level, and that's basically nothing more than past the 1.618 expansion, and we'll be able to see what's going on. I think what was interesting today for me, I have the mute TV on with Bloomberg, and I saw that the gentleman from Galleon got 11 years and fined $10 million, and that's a pretty good deal because he made $75 million, he got fined $10 million, so he goes to jail for 10 years and he makes $60 million, so $6 million a year to go to jail, if it works out that way, but I don't know if it will or not. By the time they do the retrial and stuff, it'll probably get off and get a bonus of some kind, but I don't know. Okay, we got to pay some bills here. We'll be back in just a little bit.
Are your cable rates rising? Tired of being pushed around by your provider? It's time to push back. Cut the cable and get Dish Network installed with absolutely no equipment to buy. Here's the best part. Packages start at just $24.99 a month for an entire year. That's right. Call now and get Dish Network installed free. Plus your choice of HBO, Cinemax, or Stars free for 3 months. If you call in right now, Dish Network will also throw in free HD for life. PMG Dish, a Dish Network authorized retailer, is waiting for your call and can have you watching TV as soon as tomorrow. Call 800-565-8010. Imagine all your favorite movies, sports, and shows in crystal clear digital quality for far less money, and you won't have to deal with the cable company anymore. At only $24.99 per month, they're practically giving it away. Call now for full details. Call 800-565-8010. That's 800-565-8010. Again, 800-565-8010. Limited time offer, prices, packages, and programming subject to change without notice. 24-month agreement required. Cancellation fees, auto pay, and paperless billing and other restrictions apply. Call for details.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at DirectionShares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC. Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back. If you have any questions, it's 877-927-6648. And what I've done, I've posted into the Tiger TV and the Den the Dow Jones Industrial Average chart along with the Bradley stock market model. And what I did was I enhanced the Bradley stock market model so that it would be shown a lot easier than on a thin line that sometimes I bring it up. In other words, I thickened the line so that you're able to see how it actually works. Now, this goes back several months. It goes all the way back to June, and so we're looking at June, July, August, September, October. We're looking at 5 months, and if you just glance at the thing, if you get a chance when you come home tonight and take a look at the Tiger TV and look at it, you'll see that it has done a really good job of giving an idea of when the markets are going to go up and down, and we use that as a rough guideline as where we think the markets are going. Now, when Donald Bradley did this work in 1947, he only did 1 year. He wrote a little pamphlet that was about 60 pages long, and he did a siderograph. And a siderograph is the red line that gives you the Bradley model. And what it does is it weights the 10 planets, and each of the planets has a certain either positive or negative valence, in other words, a power point. And then when you add these together, that gives you the spot of whether the market should be going up and down, and that's what you're looking at. Well, when we first started looking at this back in 1986 with Dr. Ruth Miller and my good friend Jim Twentyman, the first thing we wanted to do was to realize that if he had done just 1 year, 1947, we should start to look at all the years. And so we had all of the 3% swings in the Dow Jones Industrial Average, and then we had all of the programs were done by, Neil Michelson from Astro Computing in San Diego, who since passed away. He was my customer at Drexel, and he was the one that validated the fact that these things have a better than 75% chance of saying that this is the high or low, or we're going to have a good cycle date at this time, and it does it 75%. And folks, you can do it 200 and 300 and 400 years in advance. So there's got to be something to this astrology stuff. We got a call from Jim in Florida. Are you there, Jim?
Hey, Larry. Good morning. Or good morning. Wherever you're at. I got a question for you about Dees corn.
Yes.
And I'm just looking here. We had a gap down. Are we going to go fill that gap back from end of September? It looks like we went from 626 on the December corn all the way down to we opened at 6 at 6, and that was so we've had to run now the last week and a half, and now we've come back. It looks like we retraced 0.382 to 622.
Yes. Well, the main thing that happened down there, Jim, is when that pattern completed on the day when the news was very, very bad, and they said they were going to have more corn than God ever dreamed of growing, and now it realizes that that's not the case. It went limit up a few days ago, and now it's going back into that gap area. We're going to find out to see if it is going to hold the gap now. The good thing that I see happening is that wheat and beans are holding up relatively well, and but the main thing that's happened is that it actually has alerted some people. Do you remember we had Rich Anderson on the day that was occurring, and he said most of this liquidation was occurring because the hedge funds that trade commodities have to liquidate. In other words, they can't keep their losses from getting totally out of control. So in order to meet margin calls or to meet capitalization on how much they can risk in corn, they had to liquidate corn, and that feeds on itself. In other words, they all try to get through the door at the same time, and that's what pushed the corn down, more than 70 cents, a bushel. And then after that's all done, there's no selling, and then it pops back up, and now it's in the the backing and filling like you were just describing. Of whether it fills that gap or not, we'll have to wait and see.
If you missed that entry, and when you had that great call to go long, at what point would you wait for a 50% to 618 or?
Well, the first thing I'd do is I would wait till I jumped out of the building and landed on the concrete if I missed it. No, I would really, I would wait for the pullback and wait for a nice little Gartley pattern, and you'll probably get one. The reason why is the market was extremely oversold. There's still a lot of people that have not gone back into the corn market, so we'll probably be able to take a look at that. I'll tell you what we'll do is after we're done with the call here and we get into the next break, chart for us, and we'll take a look at it. How's that?
Yeah, hold, and then also silver if you haven't brought it up yet today.
Okay, sure, I'll do both of those.
Thanks. I'll hold.
877-927-6648.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, and we were talking about corn, and corn had a move of about 80 cents a bushel, which is $4,000, and now it's completing a small Gartley pattern down here at the 620 level. We could get all the way back to 605 and still be okay, but we'll see what happens over the next few days. The main thing is the wheat and the soybeans have held up relatively well. They've held up incredibly well. We had a big move off of the 1.618 in soybeans. Also, and that was one of the things that Rich Anderson talked about, was the fact that some of these levels, and when we get down this far, beans had been down during the month of September. They were down every day but one, and the low day was the exact 1.618 expansion on the weekly chart to the exact penny. It never went a penny below that, so it helps reinforce some of these numbers and patterns that we look at. They're not foolproof, but they do put probabilities in your favor. That's really what they're doing.
Larry, do you know seasonally when the corn and grains usually put in a bottom?
Yes, right during the harvest time, right about now, because that's when the farmers are coming in and they're putting in their they have to lift their hedges and pay the banks off because they borrowed money for seed and all the other stuff, employees, whatever they do, and so they have to sell their crops. And they lift their hedges, and that's when the most seasonal time is right in that October-November time frame.
Okay, because I was going to let you know what I ended up doing when you made that call to go along with the futures on the corn. I ended up selling a put, a naked put on the corn ETF, which CORN trades. I ended up selling the 39 puts, which expire in a week, and collected 50 cents premium. Now, that hopefully, as long as corn stays above 39 in the next 6 days, then I'm going to collect the $500 on selling 10 contracts. And then I'm going to go ahead and look forward to November and try to sell in November 40 puts for anywhere between 110 and 120. And as long as the corn stays above that $5.90 to $6, then the corn ETF should stay in that range. So it limits my gain, but it's a wasting asset, and hopefully it goes to zero by the time it expires next month.
Yes, that's for sure. And we have there'll be another corn report that comes out on the 11th and 12th, or 11th or 12th of November. It's usually the 11th or 12th. It's the Friday. I think it's the second Friday of the month that the U.S. grain reports come out, and now they won't mean as much because they know pretty much what the crop is going to be, and so it's not nearly as important as the early, the April, May, June reports when the crop is growing and how much they planted and stuff like that. So just look at the charts. Okay. I mean, the rest of this stuff is baloney.
Do you think this 570 that we put in was pretty much the low for the year right now on corn?
Well, if it isn't, we got real problems on an inflation side. I'll tell you that. That'll be very, very deflationary. But remember, 570 in corn is a huge price. I mean, when I started trading corn, it was $1.14 a bushel, and the old highs in corn was always around $3.40, $3.50 a bushel. And to see that price at something is a huge price. And we've got beans, right near $13 a bushel, and wheat is expensive. So the food across the world is very, very expensive for everybody else. We're fortunate enough because we're able to afford it, but the rest of the world doesn't. Some of these people have never tasted coffee, they've never tasted cocoa, some people have never tasted sugar. And so, the rest of the world is not in the same situation that we are right now. I mean, there's food problems all over the world, and that's one of the reasons the two reasons why wars start are food and power. Mm-hmm. And food is bigger, a thing of war than power is. So we have to be, mindful that these things are, really incredibly high priced compared to where they've been historical.
If you haven't talked about silver yet, I was looking at, it looks like that 32.50, which was the low that we set after the 49.81 high, seems to be almost like a pivot around 32.30 to 32.50, and it's holding as resistance.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, and we were getting ready to talk about silver, and one of the things that I think folks want to take a look at is if you don't believe in AB equals CD patterns, just take a look what's happened to silver over the last several days. It made a beautiful AB equals CD pattern encompassing more than $10,000, and it completed exactly at the high at 33.20, and now it's dropped down to 31.50. That's $7,500, and it looks like it's getting ready to go down to the 30.20 area. So if you start to follow some of these AB equals CD patterns that Tom and Steve and Basil talk about, you'll start to see that the markets repeat over and over again. The most important thing I think that we can do with silver is if we look at this silver on the longer-term chart, because it made an incredible AB equals CD pattern exactly where the low was to come in at the $26 per ounce level. It was so perfect that I think it made it within the exact point. As a matter of fact, I'm absolutely sure it did. And that was the time when the gold was making the 1540 level, which was a 618 on the long-term weekly. So that ABCD that we filled in the silver is very, very important. Now, what's happened is after we've made that AB equals CD, silver has rallied from $26. It's rallied all the way up to $33. So it was able to rally a little bit more than 15%. And that's a very, very weak rally. In other words, it's not even 382 of the high we made, way back in when it made the secondary high, back in July. And so, secondary high in late September. So as long as we don't, start moving up, they still have a bearish bias in the silver market. And still, silver should have some really good support if it comes down to that 28 area, 2750 area one more time on a longer-term basis. But right now, all it's been doing is backing and filling, much just the same thing that gold has been doing, doing nothing more than that. Now, I want to cover one other thing that I really like. I like the, of course, I like the IBM. Whether that works or not, I don't know. But the one that I'd really like to take a look at is the Japanese yen, because the Japanese yen versus the dollar, I think, has a potential to be a really good trade. In fact, if you remember when we started talking about corn a long time ago, I was saying you could actually teach a course in corn, and you could actually teach that same course in the Japanese yen Forex versus the dollar. I'm going to bring it into the den And you can go back into late September, and this is an hourly chart that we posted in the den, but it has so many perfect AB equals CD patterns that it's just absolutely unbelievable. I don't know if you can hear the open outcry in the background, but that's little Avery. He is waking up from his nap, and he wants to know where IBM is trading, and he can't make it to the TV, so he's giving a little bit of a grumbling sound, but he'll get over that in just a matter of minutes. But if you'll take some time when you get home from work today and go into the Tiger TV and look at this chart of the Forex, and that's, remember, Forex are the largest markets in the world, thousands of times bigger than the stock or bond markets. I mean, it's huge, and this is the third largest currency in the world. It's the yen versus the U.S. dollar. First is the euro versus the dollar, and that's what that's what we have. What do you mean get a margin call? He's in profit. He's calculating with his calculator, Danny, what he's making right now. Actually, he can count. He can count the two already because he has a 1 and a 2 on each arm. So, anyway, take a look at that Japanese yen. It's worth it's like a Pablo Picasso painting. It's worth 1,000 words to look at it, and you can see the. I don't even like Picasso. I don't know why I said that. Let's use one of the Elvis paintings with the crushed velour and the light up eyes would be better, but. It shows the AB equals CD patterns, just absolutely unbelievable. It was really, really good. The trade that we were talking about yesterday, we focused on IBM because the pattern was a 3-drive pattern. It also had a double top pattern. It had 3 AB equals CD patterns all coming together at that 187.40 level. The high was 188 and change. And we were saying to look at the October put, if not October put, the January 180 put for around 770, or to sell the stock with a stop above, 192. It might work, might not, but we'll wait and see if it, see if it works or not. But the pattern that we're looking at right now in the Japanese yen versus the dollar is really important because we went down. With several AB equals CDs over the last month, and then it had a really, really long-range bar, and we've come back and tested the 618 again, and so the risk on this trade is very, very small, but it has the same characteristics of what happened with the Swiss franc before they devalued by 25%. So keep an eye on this trade. Now, this is the trade that the hedge funds use. They refer to this one as the, let me think of my, I'm losing it again. I'll think of it in a second. But they use that because it's interest-free. They can do this trade, and that's why they like it. It's a carry trade, that's correct, because they don't have to pay any interest for the money in Japan, and so they think they're in a risk-free environment, much like they tried to pull it off with the Swiss. Well, that can change in a matter of one little stroke of a pen of someone in Japan changing the rules just a little bit. It's really easy to do that. So watch this trade. It's a very low-risk trade. It's already made well over $1,000 the first time. It's pulled back to the 618 the second time. So it's really good. And not only is it good, whether you're even going to do the trade or not, just look at the trade to see the AB equals CD patterns that are there. I mean, this is mother, God, and country. I mean, this is, it's like IBM. I mean, they're all alike, but this one is really nice because it's an hourly chart. It goes over a month, and it gives you a pretty good idea of how these patterns work. Okay, we've got to pay some bills. 877-927-6648.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, before October 31st from your local Barnes & Noble store. And you will be given access to not just one, but 2 exceptional archived courses, Tiger Scaling, the Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you only have until October 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Now, back to the Futures Hour.
Okay, we're back, folks, winding up the show, and I was going to finish it up with lumber because, lumber has been under a great deal of pressure for the last few years. We're down into the lower end of the ranges here. This also gives a pretty good idea that, this is not anything to do with jobs and things. It's all related to do with, how much debt is really out there. I think they could fix this real estate thing, by changing some rules if they were able to get it passed through Congress and stuff. But, now the banks are really reluctant to lend any money except for, the highest level folks of, that can pay it back. And they like to lend money to people that don't need money because they're the easiest ones to get it to pay back. So that's, what we're looking at. Now, the $64 question is in fact, and lumber's not easy to trade, by the way. It's very thin. It's a commercial thing. There's only a few people that actually trade it. I know of no one nowadays that trades lumber. I used to know one or two people, but they have since quit trading lumber. It's mainly a cash business, and that's pretty much what we're looking at. The IBM trade, that we were looking at, I'll put that in there. It's it's working a very tiny bit, but nothing to write home about. But it has all the things necessary, for pattern completion and everything. And it has the 3-drive pattern, the double top. I mean, it has just about everything. I don't know if earnings are going to come out or anything, but if it gets above the 192 level, that's it would certainly be beyond the place where you'd want to be having your stop. In other words, you don't want to risk more than usually 1/4% of your equity is all you really have to use if you're going to do this. So if you're trading with $100,000, 1/4% would be around $2,500. So you could use $2,500 as your stop in the IBM. That's what we were looking at, when we were watching it. It started down pretty good today. And they'll be expected on Monday, so that's okay. I don't mind going into earnings with a pattern completion. If it gets me, it gets me. But that's basically it. They pretty know that the earnings are going to be good, I would assume. So we'll just have to just to wait and see if in fact it does it. But it's a stronger than market stock today. So we'll see if if it's going to continue to do it. It gets slapped around a lot, but you also, you'll pick up some that work relatively good, I would think. So the other part that we have to look at is we had this full moon and the apogee that occurred, and the market backed off a little bit. And if it goes stronger, if we close higher on tomorrow, Friday, that will pretty much tell us that full moon is probably not working, because you'd need it to start down. We've got a big cycle coming in on the 26th. If you look at that Bradley model that we posted in the room this morning, you'll see that is a big cycle that's coming in. In fact, it's one of the largest ones of the whole year. Fact is, I think Steve Rhodes said that there's only been 35 out of 300 that have been that big of P-index dates. In other words, there's 17 aspects, and frankly, I've never seen a 17 that I could recall, but we did these by hand years ago before we had the computer. But yeah, I know 16 is quite large. 17, I guess there's going to be one, but we'll see if that's the case. So I think we're winding down right now for the end of the show. We'll see you all, folks, on Monday, God willing, and everybody have a wonderful weekend.
Great Basin Gold is a mining company engaged in the exploration and development of two